Hopefully you guys were able to catch the dip buy of the century last week. Pretty much all the names that we mentioned, including Google, AMZN, and Priceline, all reached for all-time highs. Google now chilling at 923. AMZN, we've got really strong through 307.55. Amazing action here. Priceline is a freight train. After it gapped up from the 850 all the way to 920. Looks like she's got a little bit more left. She might want to hit 935s. Overall, guys, as mentioned last week, to be prepared for some very bullish action. Hopefully you guys were able to catch that. In addition to that, good old Ben was able to really lift off the markets and really change things up a little bit. He pretty much stated that he was going to continue quantitative easing until unemployment dropped down to 6%, which is going to be a really long time. So pretty much we have had these weird gap and go and gap and crap days. Makes it really tough for day traders. So essentially, guys, as mentioned before, you have to develop into these positions and you have to anticipate the actual action. Overall, I would say that it's not really that worth it to be playing weekly options in this type of action, because during the day you're not going to have that much return. I would almost say that you should just spend more time finding a good dip and buying it on a monthly and keep it going, roll it forward. Overall, these tech names are really bullish. Things to watch out for to see if these financials will catch up too. So as mentioned previously, JP Morgan was the first one as the tell. Goldman Sachs also followed with Bank of America. Definitely, there are a lot of people trying to catch this Bank of America laggard play. Everybody wants to see this thing through $14, possibly to $14.50. Be on watch out for this one. This one might be a creeper. Overall, guys, we are getting into earnings season, so the big banks are starting to report. I believe we're going to have Priceline on a Thursday, which is going to be really fun. Not Priceline, Google. Google. Apple, I believe, is this week too. So things you want to be careful of is playing in front of them. Do not play too much in front of these, because volatility will be jacked up artificially. You'll be paying more for those prices because, again, there are exogenous events that change the pricing there. So the market makers are going to spread out more. So again, guys, be careful the type of market that you're buying into. Make sure that you're playing it properly. It's a crapshoot going into the earnings if you're trying to play something overnight. Good luck. Don't put too much money on it, especially don't go short. There's plenty of volatility the next day or the day after to catch the momentum. Also, there's plenty of space for laggard plays. Overall, guys, I would want to see the SPY at 170. Honestly, there's no reason right now that we should be selling off unless we get some really bad earnings by the banks, or there's a huge surprise via the techs. But so far so good. So overall, still bullish. Look for a pullback to like maybe 165 for a really nice dip buy to swing out at least to 170s. All right, guys, this is Peter with Market Find Benzinga. Over and out.